All right, it is time for a Money Monday here on the Morning Blend. Make money with the least risk possible. That is the goal for many of us when it comes to saving for retirement.
So true, and it's a strategy that can be difficult to navigate. So how can we actually do that with the current economy, and where is it headed? Well, Jeff Vogan, president and founder of Premier Retirement and Wealth Management, is here to help us a little bit. Welcome back. Nice to see you again.
Good to be here again.
So we're talking a lot of volatility, right? I mean, the stock market's doing better than it has in 10 years, but it, like I said, it is getting a little up and down, right? So where do you actually see this market going?
You know, it's hard to say. I mean, honestly, we've been due for a correction for quite some time. And I think if anybody says they know where the market's going, they're, blowing smoke. The market is the market. The market does what the market does. And it's going to keep doing what the market does. The thing that I think is most concerning to me is just the volatility that's entered in the last 2 years. We have created some new highs over the last couple of years, but we're not too much higher than we were in September 2 years ago. So are you willing to take some risk to milk whatever's left of that upside?
Right.
Or do you want to be smart and maybe cut some losses, maybe take some profits off the table?
Right.
And when I started in this business, I was pure stockbroker, dialing for dollars is what we called it. Every day in a boiler room, just dialing for dollars. And one of the things that I learned is, one of the sayings that came out of that is, pigs get fat and hogs get slaughtered. We get a little too greedy.
Absolutely, that's it.
And the other thing is you never get hurt taking a profit. And those are two of the things that I try to live by. And also one other thing, that you shouldn't have money in the stock market you can't afford to lose. That's really the bottom line.
Right. At the end of the day, it is a little bit of a gamble. And we know the bubble is there, and it is a big bubble right now. We're all anticipating when it's going to burst. So what are some of the words of wisdom, some advice you would give to investors right now thinking about investing?
Well, it kind of depends where they are in the investment cycle. I mean, there's people who are younger that have 20 or 30 years to wait it out. And that's fine. People that are old as my children, for example, should be investing in the stock market, not really worrying about it if they're not going to need that money anytime soon. The people that worry me most are the people that are nearing retirement and are already retired, that really can't afford to lose 50% of their assets, next time the market does what it did in 2000 and again in 2007 and 8. Protecting that risk. If you have to wait 5 years for the market to get back, that has to be money that you really don't rely on. And so setting up income streams with safer investments is always a smart idea. Also taking some of the profits off the table. Most people, once they get into retirement, really can't afford that 5-year wait, especially if they need to use that money.
And we're talking about diversification, right? I mean, you don't put all your eggs in one basket. And when people think traditional ways of growing their money, like CDs, for example, you say, well, why don't you try, it's called a principal protected account. What's the difference between that and a CD? Or is that a principal?
Well, a CD is a principal protected account, but I think if people look at the rates that CDs have been paying the last few years, they ought to change the name of CD from certificate of deposit to certificate of disappointment, right? Because they've been pretty bad. There are other principal protected accounts, and we think that's one of 3 buckets. You should have the principal protected account that never goes down, that you can rely on. You should have an account that doesn't have quite as much volatility that you can rely on for income. There's that 3rd bucket. If you want to swing for the fences, have that aggressive investment account if you want to. But the principal protected accounts can be utilized through one thing that I really like is the fixed indexed annuity. Now, it's an insurance product, and some people think insurance, oh my gosh, is that an investment? Well, it's an alternative to an investment that doesn't go down when the market goes down, but it goes up when the market goes up. So why not lock in profits when the market goes up, which you can do starting right now, take profits out of a high market, make money when the market goes up, but don't lose money when the market goes down.
Would you tell somebody who's considering bonds to do something like that instead? I'm a big fan of bonds, so what would you say?
Well, and I'm a big fan of bonds as an alternative too, but the interest rates on bonds are kind of low right now. And as the interest rates, if the Fed starts raising interest rates again, the bond prices are going to go down. So they might be okay at best. Now, I have a free report here that any of the viewers, if they're interested in picking up, I can see if the clients can call in and get that from our office. Talks about fixed index annuities being a bond alternative. It's actually written by a guy named Roger Ibbotson, who has been around for like 40 or 50 years doing stock market analysis. He's a Yale professor, and most people who've been in investing for a long time know about Roger Ibbotson. But he says this is a great alternative to bonds, and he has an index that has low volatility already, and he says These guys beat my own index.
Okay.
Why would you not do it?
It's like a little gold book for everybody. Thanks so much for
Money
being
Monday.
here.
Thank you.
If you are interested in scheduling a complimentary retirement financial review to make sure that your ideal retirement plan is secure, you can visit premret.com, or you can call the number 520-780-9059.